where we were hooked onto winter is coming. In the startup space, you would hear disruption is coming. You may have heard this sentence before, but it's a little different this time. This is not just about a cool new gadget or a single breakthrough. This is about traditional industries being disrupted, changed, and reshaped as technology evolves and borders disappear. Our next session focuses exactly on that, value creation in core industries. Please welcome our panelists, Mr. Pratyush Halen, founder of Fingpay, Mr. Bhuvan Rustagi, founder of Lendbox, Mr. Sanjeev Chandak, founder of FTCash, and Mr. Gaurav Perti, founder of PurpleTutor. The session will be moderated by Tej. Tej, can we have you? Yeah. Over to you, Tej.
Thank you. So we're going from deep tech to fintech. But I think somehow these two industries are really related, right? And good to have you all. First, I would like to start, if you can give 2 minutes introduction of your company.
Thanks, Tej. So I am Gaurav from PurpleTutor. PurpleTutor is a AI-led live class platform. Essentially, what we are doing is, all of you know that typically adaptive learning exists, but it's in self-learning platforms. We are one of the first companies in the world where we have married AI in live classes. Essentially, what our motto is to make every teacher a super teacher. So all of us had great teachers in schools, in graduate schools and after that, but there were a handful of teachers that were great. Our attempt is to make every teacher a great teacher, and how do we do that? We try to take real-time inputs of the student, real-time, and pump this back to the teacher real-time in decision-making. A very simple example could be, if a student is weak in communication, the teacher will be told, spend more time explaining the concept, rather than the one-size-fits-all approach of every student gets the same explanation, the same example. So we are an AI-led platform that gives real-time inputs to teachers in real time.
Yeah, hi, good afternoon. I'm Sanjeev Chandak, co-founder at FTCash. So FTCash is a small business lender. So we lend to small neighborhood mom and pop retailers like your Kirana stores, garment stores, etc. So we provide them with working capital loans. And lending to this segment, which is essentially a subprime segment, is a collection business. So you have to make sure your risk is right. So we have bundled digital payments along with digital loans and have created a risk management platform that enables us to lend to this segment profitably.
Hello. Hi, good afternoon, everyone. I am Pratyush Halen. I am co-founder at Fingpay. At Fingpay, we are a digital payments company. We enable digital payments typically for the last mile, that is underbanked customers, through very innovative payment solutions like Aadhaar-based payments, IVR-based payments, USSD-based payments. And we're working with many microfinance companies and small merchants in rural areas to enable them to accept digital payments from their customers. We process a good volume of 5.4 billion annually worth of payments through our platform, and we are a profitable company since last 3 years. Yeah, look forward to this panel. Thank you.
Thank you.
Hi, good afternoon, everyone. My name is Bhuvan Rustagi. I'm the co-founder of Per Annum and Lendbox. We are a fixed income and alternate investment platform. Our primary aim is to increase access to fixed income products for the Indian retail investor, because we feel that the Indian retail investor barely has any access to fixed income products beyond your traditional fixed deposits and PPFs and so on and so forth. We've been growing quite steadily for the past 3 years. We have around 250,000 investors with us. We've done over 100,000 crore worth of transactions on the platform. And yeah, looking forward to discussing further.
Thank you so much. So Sanjeev sir, we'll start from you. It's India is, as they say, is starved for cash. Um, there are people who want cash, and you lend. As a VC, we take, I would say, 2 to 3 months to make an investment decision. Sometimes even more. How do you do it so fast? What technology at the core are you using to make that decision? If you can talk about that.
Sure. So I think lending, as I said, right, it's easy to lend, difficult to get it back. And over a period of time, we have developed the algorithms, we have developed the processes, and I would say, the company DNA is suited for the target segment. So as compared to a lot of lenders, right, who lend to all the segments, we are very focused on the segment that we want to lend to. We really understand how this segment behaves, and then what will be the risk of this segment, or let's say risk of a group of customers. So we have developed that. We have gone through a few credit cycles where we have stress tested our algorithms and our platform. So COVID was unfortunate, but it did give us a real life, big time stress test. So that ultimately you have to make sure that the platform works fine and the model works fine before you can really scale up.
Great, great. So Pratyush, you're the payment company, and by the way, I must congratulate you, you're profitable. Very few profitable companies in the tech world, so congratulations. And you are actually enabling payments in tier 3 rural India. How did you think about it, and why did you actually target that versus let's say the tier 1? So I'd love to hear.
So basically, Tej, rural is very unpenetrated market, and it is very huge market. Okay, the opportunity was there because the scale was there. The opportunity was there because it has not reached its saturation level, and I think for next 5 years also it won't be. And if there are multiple players also working in this area, there is enough room for everyone to be there. So therefore we chose this segment. Another reason is that these people lack financial services and different options. Like us, we enjoy multiple options for anything we need, but they don't even have a single option. So that also motivated us to focus that segment. Now, when we entered that segment, we realized that there are a lot of challenges out there which needs to be addressed. Few of the challenges being like if you create a digital payment application, these people have a very entry-level smartphones if we have to give it via application. So how we can create a very lightweight application for these customers that it works very seamlessly on their phone. Another is like the network or the bandwidth is very limited of internet. So how it can work very seamlessly on a 2G network. And then the transaction success ratio, how we can work on that, that money is not stuck in a payment gateway. So these kinds of things we actually addressed and we worked on initial 2-3 years, and that's what led us here with while we are processing huge volumes, and that too with profitability. So these USPs of ours helped us with that. And we have recently launched a new product called UPI 123. Which is like a payment on a IVR call. So basically it's like your lender, let's take an example of FTCash. So they have a collection of 5,000 rupees from one of their customers. So it's an automated call to their customer ki, hi Tej, we are calling from FTCash and you have a due amount of 5,000 rupees. You can pay it now using UPI on this call itself. So just enter your UPI PIN and the payment is done in real time. So that's how it works. So we are actually hoping that would gonna be a good breakthrough because it works on feature phones, it works on smartphones. Like there is no constraint out there, and people in rural have Jan Dhan accounts which they are already using, and UPI registration is also simple on the same app. So that's what we are working towards next in terms of innovation. But that's a whole and thought of why we chose rural and how we are here.
And that's really, really amazing, innovative product because people understand voice way better than typing, and especially when you get to rural. So that's amazing. So switching to Bhuvan. Bhuvan, you are catering to the other side. People who have made money, you want to make them more money. So talk about like some of the products you're launching and what kind of traction you're seeing, you know, and is there been like a drop after, you know, after this euphoria in terms of, or people have become more, you know, like more towards fixed income side, you know, your thoughts on it?
Yeah, so you're right. We're catering to the other side, but we don't want to cater to only people who have a lot of money and surplus. In fact, we are a mass market product where we have the ability to take even 1,000 rupees from someone and invest in a fixed income product, because that's the kind of target. So as in fact, Fingpay says that most people outside of tier 1 cities don't even have investment opportunities or access to any kind of financial services for that matter, regardless with the payments, lending or so on. And so we want to be that player where we tell them that please don't put your money in your fixed deposit. You're not even beating inflation. You're practically losing money. Put your money with us. We'll give you 11% or above, and you'll at least generate some wealth, right? So till last year, we were primarily into debt-based products. But then we launched Per Annum, which is a much larger and much more innovative platform where we're entering into other asset classes as well, whether it be asset leasing, bonds, fractional real estate, and so on. And again, the backend is highly tech-driven, where we have the ability to fractionalize an asset to a very small chunk and very easy to understand for the retail investor. And we also have the ability to give them liquidity so people can exit whenever they want, whether depending on the product. Some products have an exit load, some don't. So we give access to liquidity as well, because education is a massive, I think that is the only challenge which maybe all of us face, where consumers are not aware of what is available. If whatever is available, do they want to learn? Do they not want to learn about it? So we just make sure that the experience is extremely seamless for the user. It's complex for us, but that happens entirely at the back end.
So for this audience, what is the maximum return we can make if we go to your platform? Will you make us 30%?
Maybe we can give you an IvyCap special of 1% more, so you can make around 13%.
Excellent, excellent, excellent. So coming back, I think PurpleTutor, the education has, you know, seen the best days and the worst days. You know, obviously COVID, everybody wanted to go online. So my question is like, how are you differentiating, given there's so many options, right? And given there's elephant in the room with Byju's. Yeah, so your thoughts on it?
I'll give a slightly long-winded answer to this one, Tej. You know, if you rewind about 14, 15 years when Byju started, it was the era of pre-recorded content, right? I mean, it was almost like a pen drive company, as people call it, right? With a tablet. You fast forward 7, 8 years, and the geo revolution or the bandwidth revolution took place, right? And suddenly you realize that, hey, live classes are possible, right? And that was the era of live classes. When you move to live classes, I think the thing that you really want to solve is, for a student, that student outcomes have to be great, right? How do you make learning more effective? And typically that's a function of personalization, like I was talking about, right? And that's the holy grail problem you want to solve in live classes. Personalization. And secondly, ensuring that there is a bit of standardization. That means what you're promising to the user, you actually deliver that in terms of the teaching, the course material, etc. Right? And the way we have done it is that most people have focused on removing teachers, you know, on most platforms. Even live platforms, most AI platforms focus towards removing teachers. I mean, you have a GMAT test or, you know, adaptive learning platforms. Most of them platforms are typically focused towards, you know, engaging you on ability level or IQ. Difficulty level keeps on increasing as you give more and more questions right? That's also AI to some extent, rule-based AI, right? And the way we look at it is, the way PurpleTutor is, we are trying to make these live classes great. So how do we make teachers super teachers, as we spoke about earlier, right? So what we're doing is, we are creating something called a student profile, and which could be basis of ability level / IQ. It could be interest level, Like, what do you like? I mean, a child could like aeroplanes, cars, or whatever, right? Communications, how good are you on communication? And there are so on and so forth, so many factors, right? All this data is collected and real-time crunched. And real-time, there is a output given to the teacher what to do, right? Now, it could be you're in a class of app development and you're doing some sort of 3D game design or whatever. Now, how good is it that if, let's say, the child likes car racing and you tell him, listen, kid, why don't you just do a car racing game, right? The engagement levels are that much higher. For example, when a child does not get multiplication, right? Most traditional teachers would keep on explaining multiplication. They would keep with different examples and in different ways, not realizing that the problem could have happened earlier, that the child may not have understood addition. Because multiplication is what? It's a series of additions at the end of the day, right? The AI platform here will tell you, listen, don't fix multiplication. Go back a node, what we call in the knowledge graph, and fix multiplication. Come back. It's more effective. So we are using these real-time inputs to tell teachers at critical decision-making points what to do. So it leads to far better outcomes, far more personalized classes for the students.
Understood. Interesting. I wish a lot of my teachers could give me real-time feedback when I was growing up. So
join PurpleTutor.
So coming to Sanjeev, I want to switch the gear towards regulation and regulators in your business, in fintech. There's been a lot of chatter about, digital lending, regulations which are coming up. Some of it is good, some of it, stalls the business. Would love to get all three of your reactions on that, and how do you navigate as you're building the business?
Sure. So I think, last few months has been an overdrive on regulations and circulars, etc. So I think obviously, there are some points where we as FTCash have to change and modify or adapt our business practices. But at an overall level, I think it is good for the ecosystem, because there was a lot of riffraff that was going on in terms of the Chinese lending apps, the loans, unfair collection practices, usurious lending rates, etc. Right? So I think RBI is trying to, or both the RBI and the Finance Ministry is trying to clean that up, so that in the ecosystem, the real operators are there. It will improve the consumer confidence. It will also tell us what the rules are, and we as lenders will abide by those rules. And overall, I think once the noise dies down, it will be good for the ecosystem. So, and RBI, I've been, since my Deutsche Bank days, I've been closely interacting and all of that. It's a very good regulator. I think they do the right thing. They foresee issues and try to remove them or storm them out early on before it messes up or disbalances the ecosystem. So I would say overall good, even though all fintech players have to modify part of their business models, etc. But if we are going for the long term, it is a good thing.
Got it. Very good to hear that. And I agree. I think there was a lot of riffraff, which will get cleared out. Yeah. Pratyush, as payments?
In my view, they are doing a very good job. The first thing is they are moving with speed, like a fintech, releasing circulars every now and then. And good for us because they are helping curb the bad practices taken by a few companies and then ultimately affect the entire market. So it's good that they are very proactive. I am liking personally all the circulars, frankly, but at the same time, I think that is one of the reason of our growth. They actually added like a catalyst, being the kind of payment products they have pushed, how the NPCI is working. So the push behind NPCI from RBI, the support to all those people to launch those products has been amazing. And I think the whole world is seeing now. We have been talking in other panels as well. The UPI and Mr. Kamath also spoke in the morning regarding these different payment systems which the whole world is watching and far advanced than the very developed geographies of the world. So yeah, so I think that's good.
Just to add, I think UPI from Indian perspective has become a benchmark for many nations. And as a matter of fact, we leapfrog China, right? Because China was closed loop ecosystem between Alibaba and Tencent. And I know there personally some of the Australian embassy people were in India, some people from Australia to learn UPI to implement in Australia. So it's fabulous.
And actually, they are going both with UPI global also and local also. So with global, they have recently launched in UK and they are done in Nepal. And with local, like they are also looking towards the rural, the unbanked feature phone customers also how they can still use UPI. So on both fronts they are working, and that is amazing.
Yeah, just on that one more. I was with my friend from the US, and you know, I used the QR code to make payment. He was blown away. He's like, how did you just do this? So it's amazing. Yeah, your thoughts on regulator?
Yeah, so RBI is considered to be like, it's given a bad name because like Sandeep said, last few months have been just a explosion of regulation. But I think overall regulation is a good thing. Although for startups like ours, we always feel that it's restricting, they're restricting us and so on. But RBI looks at a much long-term vision, and their main aim is to avoid systemic risk. Right. So, for example, in our case, we grew like from 5 crore a month to around 100 crore a month worth of investments. We have from 10,000 investors in 2 years to like now 250,000 investors. And so we've achieved quite a large scale over a very short period of time. Even though like on a overall scale, we're not that big, but I think what RBI does is, in India especially, it has been extremely proactive in a lot of cases. In some cases, maybe not, but in most cases, RBI has been extremely proactive to try and avoid systemic risk in advance. Right? Like, for example, in China, because we were doing P2P investments, the regulation came about when it was a more than $100 billion industry. It was way too late, and then suddenly everything crashed. In our case, when the regulation came out, it was, I don't know, not even 100 crore industry. So it automatically created a certain discipline. So I think what regulation does is that it creates discipline in the existing players and in the newer players as well. And for an incumbent player, in a way, regulation is good because it also creates a barrier to entry. Like people then think twice about entering a space which is regulated. And I think even for VCs, a regulated space, especially in the fintech sector, is preferred because then there is no gray area. At least that's what we faced, that there's no gray. They know that, okay, this is a regulated entity. They're already doing everything according to compliance. And then going forward, we also know how to deal with the regulator. So regulation, I don't think it is something to be scared about. I think it's something, if you're doing everything ethically and in the interest of the consumer and your interest as well, obviously, then I think regulation is nothing to be feared.
Great, good to hear that. A lot of our board members are close to, you know, RBI, etc. So I think they will take this feedback back. Good to hear that from entrepreneurs. So coming to education and regulation, what's your view? Is it static, or are they supportive, or doesn't matter?
It's a very good question, Tej, and I think today, obviously, there are limited set of regulations that exist in the education space, and I think everybody in the room here knows what's happening with some of the big companies, right? And there's a lot of bad press all over the place. But the way I look at it, I think MBA 101, right? I mean, whenever industry sort of forms, grows, it achieves a certain threshold, it goes through its cycle, right? You're going to have these issues, right? You're going to have a lot of people just piggybacking on an opportunity. It could be for whatever reason, like COVID, right? I mean, you suddenly see an opportunity and there were a lot of startups mushrooming and they were getting funded, right? And there is a lot of press about they're not refunding customers, right? Regulation is required. and I think there needs to be a balance between regulation and growth, innovation, right? Innovation is very, very important. And if you see the, like I said previously, from Byju's, the EdTech 1.0, which was pre-recorded content, to live classes, and how we have changed, and how everybody is striving towards better outcomes, right? So you need to have an environment that nurtures innovation. I think fintech has gone through its course of financial services because it's a fairly mature industry, right? You've got extremely strong regulators like an RBI or a SEBI and IRDA and a whole host of others, right? I think there's a need of self-regulation also, that you do what is right for the customer in the education space. Maybe sooner than later, you're going to see some sort of self-regulatory body or even the government coming up with regulations. I think the point to consider here is that it should be a balance to ensure that there's a good amount of innovation that can take place.
Understood. Very good. So I think we have, I'd love to have audience, if they have any question. Yeah. PG, sir.
So Pratyush, the question was actually for you. All right. So, some of the numbers that you talked about, very impressive numbers. I think you mentioned 100 million customers.
The users, the payment users.
Users, yeah. And about 7 billion transactions and so on, right? More. Okay. Now, that's huge data that you are sitting on. So why don't you also, do some rating of these 100 million customers? And I'm sure they are customers for you, and for banks and so on. So perhaps that's a gold mine that you can actually leverage. I'm not talking about a credit rating, but at least you could be doing some variety of a rating of these in terms of the inflows that they are coming, how they are consuming it, how they are utilizing it, and so on.
No, so very bang on. So we are working on a super application for these customers because we have a lot of data of theirs. And in this super application, what we are doing is, because in rural people are moving towards a smartphone, they are starting to use smartphones. And then we have created an application for them that in a single app, Fingpay application, they have their entire profile out there. They have UPI out there where they can link any of their bank account on the same app and start making payments, receiving payments, checking bank statements, etc. They can open a bank account, they can open a wallet, they can buy insurance, they can invest in gold, they can buy, sell gold, make bill payments, see government schemes relevant to those people. So all of that, that's why we're calling it a super app, that in a single app, they will be able to do host of financial services. And that is what we really wanted to do, to be very open and frank. In 2016, when we started this company, the aim was that ये rural इंसान के पास हम लोग सारी financial services कैसे लेके जाएं. Now there were two options. एक हम बहुत सारा marketing करें and that will go out of budget and then वो profitability और वो सारे questions आ जाएंगे. Second, हम efficiently कैसे जाएं. तो हमने recognize किया कि there are two set of people जिससे ये rural का बंदा interact करता है. एक है उसके पास की दुकानदार जो retailer है और दूसरा है उसका वहाँ का lender जो कि माइक्रो फाइनेंस कंपनी है या रूरल एनबीएफसी है. सो वी स्टार्टेड वर्किंग विद बोथ ऑफ देम. तो हमने माइक्रो फाइनेंस को अनेबल किया कि आप आपके कस्टमर से डिजिटली पेमेंट्स लो, उनके एलएमएस से इंटीग्रेट कर दिया, एंड टू एंड की रिकॉन, ऑनबोर्डिंग सब कुछ सिंप्लीफाइड हो जाए. एंड दे स्टार्टेड मेकिंग पेमेंट्स थ्रू आधार, थ्रू यूपीआई एंड ऑल ऑफ दोस. सेम हमने वो मर्चेंट को भी अनेबल कर दिया जो उसके बाजू का दुकानदार है कि ही ऑल्सो कलेक्ट डिजिटली फ्रॉम हिज कस्टमर. कस्टमर को बेनिफिट ये हो रहा है कि उसका डिजिटल हिस्ट्री क्रिएट होता जा रहा है, ट्रांजैक्शन हिस्ट्री क्रिएट होता जा रहा है, जिसके बेसिस पे उसको कल लार्जर लोन्स, लार्जर फाइनेंशियल सर्विसेज मिलेंगी. पीपल लाइक संजीव विल गिव देम, ऑफर देम मोर एंड मोर लोन्स देन. So that's what we wanted to achieve, and now we are at that stage where we are across 11 lakh retailers in India, out of which 4.5 lakhs are active, using daily, monthly active numbers. And more than 48 enterprise customers like MFIs are using our system, and we are processing this volume with profitability. And now we want to reach that end customer through these channels. So these will act like a vehicle for us to reach there, and that too in a profitable manner. So that's what the entire we planning.
Yeah, I think there's a lot of between you guys also a lot of data sharing that could happen. Great. Any other question over there in the back? Check.
Yeah, hi Sanjeev, this is Anand here. Question to you, what's your AUM, ROE, and what were your peak delinquencies during the COVID in the mom and pop lending business that you have? And are you looking for a funding? Question to Bhuvan is that your alternate investment platform that you have, how do you basically onboard the customers, and you offer basically a guaranteed kind of products? And if yes, how do you ensure that guarantee come through, and what kind of investment basically that you make? And again, you are also looking for a funding of.
Yes. Hi. So we are now managing the loan book of around 300 crores. I think that's the AUM. In terms of, I think your second question was ROE. We are working towards profitability. So we are not profitable yet, but no, in a few months, no, we'll hit that point. Our loans are all unit economics positive, right? So as I said, we have seen through a multiple credit cycles, both good cycles and bad cycles, and then we want to make sure we make money even in a bad cycle. So no, we have seen that, tested it in real time, and that's where we are. Definitely, we are always looking for money. So.
Yeah.
Yeah, so our channel of acquisition for customers is two-pronged. We have a very strong digital channel as well. Actually, three-pronged, I would say. One is obviously our digital channel, which is Google, SEO, Facebook, and so on and so forth, which contributes to around 35–40% of our users. Then a massive channel is users referring other users. So around 20–25% of our investors come from are referred by other investors. And then there is an offline or an indirect channel, which gives us certain high value clients, which will invest anywhere from 5 lakh and above. These are through financial advisors, wealth managers, brokerages, and so on and so forth. We don't guarantee a return. I don't think any investment, if they say they're guaranteeing a return, you should not go for that, because there's something off is going on there. Yeah, but we have extreme levels of risk mitigation layers in place to make sure that the principal is as protected as possible. However, at the end, in any kind of investment, the risk, in our case at least, lies with the investor. That's what the regulator has told us to do. So we never take on the risk on our balance sheet or anyone else. The risk at the end is of the user. But yes, we also make sure that the investor is aware of all the risk mitigation mechanisms we have in place. And we also have a certain vintage. We've been giving consistent returns for the past 3.5–4 years now. So there is a certain vintage which we are able to prove and showcase that we've been giving 11–12% returns over the past 4 years. So there's a certain level of trust which has been built now on the platform. I think that answers the first bit of the question. The second bit is, yeah, fundraising. We've been told, and we have trained ourselves, yes, that we're always looking for capital, because we need expansion, growth capital, right? I mean, if given a choice today, we can switch gears and try and shift to profitability, but we also want to expand as fast as possible, and we want to compete. And when we're competing with funded companies, we also want to raise capital so that we can compete with them and expand further. So yeah, we are raising capital.
Great, thank you. I think we have one question. We can take one more. And check.
Hi, good afternoon, everyone. This is I'm Sameer Agarwal here. I'm co-founder of an Fintech company by name of Neve Credit. So dealing a lot with RBI regulations and on the education side as well, because we are an education-focused fintech company. So just a quick question to all in terms of RBI, whenever these regulations they are coming up, they talk about bringing transparency. They talk about ensuring that the end user knows each and everything. So on two perspectives, just wanted to have knowledge of the panel. One, all these tech companies, maybe FTCash, Lendbox, are you looking at backing your technology with acquiring an NBFC and then getting into a fold of regulated entity? What RBI is insisting is that, it should be all regulated. So are you looking at that option of back-end integration of getting into NBFC mode? One second, most of the platforms which are doing lending in the market, whether it be MSME or education, we have seen the ROI, actual ROI or the IRRs, what we call about is above 20%. It's not less than that. And RBI is very clear now that the end cost should be known to the user. Are you going ahead and disclosing that end cost to the customer?
So I'll answer it first. So we are a regulated entity actually. So we are an NBFC. It's a separate kind of NBFC. It's not the traditional deposit, non-deposit taking NBFC. It's an NBFC P2P. That is one of our companies holds that license, and we've been using that. That is so to answer your first question. So we are already, and so then other companies work with us. And the transparency bit, we've always, even before the regulation came out or this digital lending became what it has become now, we were always very key on transparency to make sure that on both sides, on the investor side, the user knows where the money is going, how it's being invested, and what all risk factors are there. And on the borrower side, we don't deal directly with borrowers the way we function, but we make sure that the partners we work with, and you're absolutely right. In fact, 20% is a conservative number. In some cases, it was even 25, 30% or more, because the upfront charges were very high, and most of the small ticket loans, the charges were very high. So and in most cases, a lot of times users didn't even know where the loan is coming from, and they would just see it on the credit report at some point, maybe taking a home loan or something, and they would not get it. So you're absolutely right that was an industry problem and still exists today. We started dealing with this problem around 2.5 years ago already, because we realized that a lot of users did not know where the loan was coming from. They were not able to sign the agreements. We started realizing these issues when we started working with some digital lending apps at how they're functioning. So, and being a regulated entity, it was very important for us to make sure that if tomorrow RBI asks us, RBI will not pull up the lending entities because lending apps, because they are not regulated. They will pull up the regulated entity. So we wanted to make sure that everything is above board. So whichever app we were working with, we made sure that the end user knows, so they would get a message, they would get an alert that this is what you'll see on your CIBIL, you're borrowing from this company, please sign this, these are the charges and so on. And this thing, so RBI has been doing this digital lending exercise for the past 2.5 years. There was a case of Chinese lending app in Hyderabad. Since before that. So they informed us much in advance that this is what their expectation is, that the end user and borrower should know what all charges they are paying. So we made sure that the end borrower knows in the agreement or whichever partner we are working with, that you need to give an alert. And then even on a call, we would tell the user, ki, even if it's a 10,000 rupee loan, this is what your cost is. The problem is a lot of people still didn't understand what exactly they are paying. But on a global, on an overall scale, I understand where RBI is coming from. But the population which is paying that much, most of the times they don't care unless and until they really become cash strapped.
Got it. Thank you, Bhuvan. Sanjeev, if you want to add something very quickly, and then we'll wrap it up.
Just to add, I mean, we are also a regulated entity. We have an NBFC license of our own, and we also disclose all charges upfront. I still remember early on when we were doing payments, digital payments, pre-demonetization, there was this one customer from IIT Bombay who said, "आप तो बोले थे पर 12 पैसा कम आया." So no, we have a proper reconciliation and a proper messaging so that whatever we disclose upfront, we only charge that.
Thank you. So at IvyCap, we are in habit of creating dragons, and I hope we can create more from our panel here. Thank you very much for your time, and big round of applause for them.
Thank you.
Thank you.
Hello. Thank you so much, panelists, for sharing your insights. It was really interesting and nice to hear our entrepreneurs speak highly about regulations. Time for group photograph. Can we also have the token of appreciation for our panelists, please?